In this massive AI gold rush we're all living through, two totally different stories are playing out. In the middle of the biggest AI gold rush in history, fortunes are being made and lost. Behind every headline, there are two completely different stories unfolding at once. For some, it's a boom like never before. Chip makers are striking deals worth billions, becoming the real winners of this revolution. For some, it's an incredible boom. For others, a serious reality check. This is a tale of two markets. But on the other side, software companies are hitting a reality check. The hype is fading, and now investors want results, not promises. So where does the smarter bet lie? With the companies selling the shovels or those digging for gold?
You know, in this massive AI gold rush we're all living through, there are two totally different stories playing out at the same time. For some companies, it's an incredible boom, but for others, it's a serious reality check. Today, we're digging into this tale of two markets.
All right, so here's how we're going to break this all down. First up, we'll look at the hardware companies that are absolutely striking it rich. Then, we'll pivot to the software side, where companies are kind of struggling to find their footing. After that, we'll explore the surprising new battlegrounds opening up. And finally, we'll zoom out to see the huge global forces that are shaping this entire game.
To get a sense of the sheer scale we're talking about, just look at this number. The market for AI chips, just the chips, is expected to grow by over $900 billion by 2029. I mean, that's not just growth, that's a complete seismic shift in the global economy. And it all comes back to this, right? The physical hardware. These little, intricate pieces of silicon, they are the engines driving every single AI application we hear about, from massive data centers down to the phone that's in your pocket right now.
So let's start with the clearest winners here. You know the old saying about a gold rush? Don't dig for gold, sell the shovels? Well, that's exactly what these companies are doing.
And wow, what a shovel this is. Just the other day, the chipmaker Broadcom announced it had locked in a massive $10 billion deal. That's to supply just one major customer with custom-designed AI chips. The market's reaction? It was immediate. Investors absolutely loved this news, and the stock just took off. It was this huge vote of confidence, basically confirming the idea that right now, the most direct way to play the AI boom is to build the hardware that powers it. So this brings up a really crucial point. There are two main paths to success in this space. On one side, you've got the giant, NVIDIA, with its powerful, do-everything GPUs that have become the gold standard. And on the other side, you have Broadcom's strategy, making these highly specialized custom chips, called ASICs, for huge clients who need insane efficiency for one very specific job.
Okay, so this hardware boom, it paints a completely different picture for the software companies. They're the ones actually out there searching for gold, and, well, it's proving to be a lot harder than anybody really expected.
And this chart just illustrates that divide perfectly. On the very same day that Broadcom was celebrating its huge deal, the software giant Salesforce saw its stock do the exact opposite. It tumbled almost 8%.
So what happened? Well, Salesforce gave a pretty weak forecast. They basically told Wall Street that even with all their new, slick AI features, it just wasn't turning into the immediate cash that investors were hoping for. The AI hype wasn't paying the bills, at least not yet.
And this isn't just a one-off thing. I mean, look at C3.ai, a company that literally has AI in its name. Its stock plummeted after it reported that its revenue had actually fallen by almost 20%. It is a brutal reality check happening all across the AI software world. This quote from a market analysis really just sums it all up, doesn't it? The era of just telling a good story about AI is over. The market has shifted. Now investors are saying, okay, that's a nice story, but show me the money.
Now here's where things get really fascinating, because the front line of this AI war is expanding. It's not just about who has the best chips or the biggest cloud anymore. New battlegrounds are popping up in places you might not expect.
For instance, take this move from Atlassian, the company that makes tools like Jira. They made this surprise $610 million bet on a startup that makes a totally new kind of web browser. What they're buying into is this concept called an agentic AI browser. So the idea is to change the browser from just a passive window you look through into an active AI assistant that understands what you're doing, summarizes things for you, and can even take actions on your behalf.
And they're definitely not alone. This move puts Atlassian right smack in the middle of a new war.
going up against Microsoft's Copilot and Edge, startups like Perplexity, and of course Google, which you know is racing to bake more AI into Chrome. The very way we use the internet is now up for grabs.
But let's zoom out for a second, because none of these companies are operating in a bubble. There are massive geopolitical and economic forces at play here, and they're basically rewriting the rules of the game for everybody. A recent survey of top semiconductor execs asked them what's really keeping them up at night. And get this, the biggest concerns aren't even technical. They're tied between trade tariffs and geopolitics on one hand and a massive shortage of skilled people on the other.
It all really boils down to this one critical question. In a world with more and more tension, who actually controls the incredibly complex and, frankly, fragile global supply chain that this entire AI revolution depends on? And governments are no longer just watching from the sidelines. They are actively jumping in. The US and Europe are pouring tens of billions of dollars into building up their own domestic chip manufacturing, while China is pushing its companies to use more locally made chips. This isn't just about business anymore. It's about national strategy. So the crucial point to take away from all of this is the really stark divide that's running right through the AI market. On one side, you have genuine euphoria for the hardware companies, the ones building the foundation. But on the other, a pretty painful reality is setting in for the software innovators who are still trying to figure out how to build a profitable business on top of it all. Which leaves us with this final critical question. As this modern gold rush keeps unfolding, where does the smarter bet really lie? Is it with the companies that are providing the essential tools, the shovels and pickaxes? Or is it with the pioneers who are out there searching for that one breakthrough application that could change everything? The answer is going to define the next chapter of the AI revolution.
In this modern AI gold rush, where does the smarter bet really lie? In selling the shovels or finding the gold? Today, we're digging into the winners, the strugglers, and the surprising new battlegrounds defining the future of AI.